Bajaj Auto Q4 numbers are out, and let's connect to our colleague Srishti, who's getting you all the details. Srishti?
Well, yes, a great set of numbers coming in from Bajaj Auto this time around. We were expecting a healthy set, if you could say. And this time around, they have surprised on the revenue, EBITDA, as well as the margin front. EBITDA has been recorded at 1,716 crores versus ET now estimate of 1,571 crores. The revenue, the number is coming at 8,904 crores. The estimate was 8,412 crores. And a surprise coming in on margin front as well versus the expectation of 18.7% of the margins. The company clocked in a margins once again over above 19%, and 19.3 is the number. And last one to the profit figure, it was almost in line to what we were expecting. So 14.1 to 1,412 crores was the expectation, and 1,433 crores has been recorded. But let's understand what the analysts make out of the numbers, because the exports are still there's something that needs to be done on the export front, which had declined on a sequential basis while the domestic business was supportive. And onto the show, we have Ashwin Patil with us. Hi, very good evening, Ashwin. The first cut on the Bajaj Auto numbers, a surprise coming in on the margin front versus the street estimates. How do you look at this number and the rest of the numbers as well?
Yes, it's a surprise definitely on the margin front, and I think that this should be attributed to the RM costs impact, which definitely comes with a lag, and the steel prices and the other raw material basket, which has fallen in Q1 and Q2, the impact of that has started to seen from Q3, and in Q4 the impact is seen even to a greater extent. Also, I think that the three-wheeler numbers were quite very strong in the last quarter as well as the previous quarter. So I think the three-wheelers, which are a high margin business, they have also paid and contributed to the margins that the outperformance at the margins that we have seen.
Not mistaken, this 19.3% of the margins is the all-time high levels for Bajaj Auto, because 19.1 was the all-time high that the company told us about in the previous quarter. So, do you believe that these set of margins are sustainable given the performance in their international business, and what to make sense for the sector as well? Because even TVS Motor has a lot of exposure in the international market. So, anything to pick up on these lines?
See, I think that the RM prices, the softening of RM prices, the impact of that will be seen in coming couple of quarters as well. And also I would say that the export markets are expected to be getting bottomed out at this point in time. So in case, because in the last call as well, they had said that maybe like from May, June onwards, we may see some sort of revival in the export numbers. So in case that happens, then definitely we can see a more upside to the margins from current levels. So I think that this is a slow start. A gradual start, I would say, to margins to be seen in a higher territory from these levels.
Do you expect an upgrades coming in on Bajaj Auto, and what's your expectation on the stock price as well, because it's already sitting at its 52-week high levels? So what are the next targets that you should be looking out for, and the stock reaction expected tomorrow?
Yes, I would say that although the stock has shown a 52-week high at this point in time, it can definitely move slightly above from these levels. And I need to work on my numbers now, but I think that there can be upgrades given the margin performance and exports expected to get bottomed out, etc. So I think that a good sweet 8 to 10%, at least 10% kind of upside can be seen from these levels. Although the stock has shown a 52-week high.
So a 10% upside is still pending probably as per Ashwin, but with this we let you go on that. Ashwin, thank you so much for joining us today on ET Now. So that was all about Bajaj Autos Q4FY23 earnings, a good set coming in, the surprise coming in on margin, revenue as well as EBITDA front, although the profit was in line and the company clocked in 19.3% of EBITDA margins, and even getting a thumbs up from the analysts as well. Back to you, Kavita.